Yes, there are going to be uptrend in the market, and yes, there are going to be downtrend in the market. But what most traders don't know is that this uptrend and downtrend are going to come to an end in a certain period of time. An uptrend is when buyers are consistently moving the market to the upside, while a downtrend is when sellers are constantly moving the market to the downside. But then there's a time where sellers are going to get tired of moving this market to the downside. What happens after this? The buyers are going to take control of the market from the sellers and start pushing the price up. Then we have an uptrend. But then for the uptrend example, there's a time whereby the buyers are going to get tired pushing the market to the upside. Then the sellers are going to take control from the buyers and start pushing the market to the downside. As a forex trader, if you don't know when this important market structure shift is going to happen in the market, you are going to be making series of losses, and that's why this video is here to help you. And now we are going to be approaching the market with the ICT Trend Reversal strategy. For the buy example of this ICT Trend Reversal strategy, price is first going to be in a downtrend, right? Consistently breaking structure to the downside. As you can see right here, we have a downtrend because price is gradually breaking structure to the downside. You can see price creates a structure, it goes up and then breaks this structure to the downside. That's why you see right here we have BOS, which is break of structure. Then price creates another structure right here, retrace to the upside, and then comes back down to break this structure, right? So in a downtrend, you don't want to see price do what? You don't want to see price break structure to the upside. We want to see that break to the downside. So what I'm saying is there's going to be a particular time in a downtrend where price is going to struggle to continue going lower. You can see right here, retracement. Price is meant to break to the downside, but then price is not going to break the structure to the downside. It's then going to start going up to break structure to the upside. As you can see right here, we have a break of structure to the up. We have a break of structure to the upside right here. Now, we don't want to see a break of structure to the upside, but then when we see a break of structure to the upside in the downtrend, it means that the buyers are taking control of the market from the sellers. The ICT has given you a method in which you are going to use to approach the market in scenarios like this, right? When you see a break of structure to the upside in a downtrend, you want to start looking for buy opportunities. Most of the time, there's going to be another block or a fair value gap around this point in the market. Now, price is always going to have to retrace back into, right, to fit the level of inefficiency in the market. Use that as fuel to start pushing to the upside, right? So that's it. We want to start buying from points like this, right? We'll set our buy limit order at this point. Stop loss is going to be below this lows right here that price struggled to break to, and then we are going to start targeting the highs, which is all this liquidity that price left in this point. Right? We're going to start targeting all those liquidity right there. For a sell example, the first thing we want to identify is an uptrend, which means price is consistently breaking structure to the upside. You can see price created the structure right here. It's retraced to the downside and then it goes back up to break that structure to the upside. Retrace back to the downside, goes back up to break that structure to the upside like that, right? So as you can see right here, we are constantly seeing break of structure to the upside right here. You can see right here, we have an uptrend because why? Price is consistently breaking structure to the upside. You can see right here, price created the structure. It went back up to break this structure. It's retraced back to the downside and it went back up to bring this structure to the upside. So we don't want to see price breaking structure to the downside. I don't want to see price coming down to close below this point. We want to see breaks to the upside in an uptrend. Now, for what I'm saying is that there's going to be a time whereby price is going to struggle to continue going high. You can see that price retrace from this point to the downside. The price goes back up to try and break, but then it fails to break to the upside. And the sellers is going to take the market from the buyers and push the market to the downside and close below a swing low, right? We don't want to see a break of structure to the downside in an uptrend, but then in this case, we are seeing a break of structure to the downside. Now, there's no need for you to panic. When you see a break of structure to the downside in an uptrend, it most likely means that the sellers are going to be in control of this market from now on, because the buyers failed to break a specific level to the upside twice, right? They failed to break it the first time and then they failed the second time. So the sellers then broke the market to the downside. What does this mean? This means that the sellers now have more control than the buyers. So most of the time, using the ICT trend reversal approach, we are going to see a fair value gap or another block around this zone in the market where the buyers is going to push price into to fill the level of inefficiency or level of imbalance in the market, and then sellers takes control of the market again and push the market to the downside to target this liquidity that was left behind right here. And we want to be selling from this point where the buyers push the price to, because we know that sellers are now in control of the market overall. Stop loss is going to be above this swing high right here. Target is going to be swing lows and liquidity below this point right here. Let's take a look at some examples on the charts. As you can see right here, you don't need anybody to tell you what is happening in this market. You can see that we are in a downtrend in this kind of market because price is doing what? Price is constantly breaking structure where price is constantly breaking structure to the downside, right? You can see right here, price is creating structure, retracing back to the upside and then breaking that structure, creating another one, retracing back to the upside, breaking the structure like that, like that. So basically, that's what we can see right here. Now, what do we want the market to do? We want the market to do what? We want the market to retrace back up like this and then break this structure to the downside so that the downtrend can continue, right? So now let's see what is going to happen right after this. As you can see right here, you know that we said price is meant to be breaking structure to the downside in the downtrend, but then you can see that price created the structure, tried to break to the downside, and then it's failed, and then see what happened. Buyers push the market to break this structure to what? To the upside. Now I want to switch to a lower time frame to get a better understanding of what is happening in this kind of market right now. This is looking like a double bottom pattern for those of you that trade patterns, right? You can see price came down here, broke structure, broke this structure to the downside, and then it's retraced back to the upside. So it was meant to break to the downside like this, but then it failed to break, and then it went back up to the upside, breaking structure to the upside, which we don't want to see in a downtrend. But then if we see something like this, there's no need to panic. There's a way to approach this. This is the ICT Trend Reversal strategy that I'm about to teach you. Notice that we used to have equal lows right here. We're having equal lows right here, which means that there are a lot of liquidity below this point, sell-side liquidity, which means that there are a lot of traders who are buying at this point and then placing their stop loss below this point, and a lot of traders who are placing sell stop orders, hoping that the market is going to go below this point. And now notice what price did to them. Price came down with a wick, right? You can see price was going up. A lot of traders will be hoping that price is going to start going up from here, but then they are already buying and placing their stop loss below here. Then see what price did. Price came down with this wick, hit all their stop loss, trigger all the sell stop orders from all those traders that want price to start going lower from here before price eventually started going up to break this structure to the upside. You can see that the market is always against us. It doesn't want anybody to make money. See how it took out all the buy traders and also all the sell traders who were expecting the market to go lower from here. Now, what we can see right here is that we have a fair value gap right here in the 15 minutes time frame. We have a fair value gap right here, and now we want to place our buy limit order inside the 50% retracement level of this fair value gap, which is somewhere right here. And now we're expecting price to come and take out this liquidity right here, right? So it's going to be a risk to reward ratio of 1:2 right there. So now let's see how this trade is going to play out. You can see that price has triggered our entry right here, and it's currently rejecting this fair value gap, which is a very good sign now where our trade is going to be going in the right direction. You can see right there, TP smashed without any stress, and this is very, very easy to apply. First of all, we don't want to see a break of structure to the upside in a downtrend, but then we saw that break of structure to the upside, and because we saw that break of structure to the upside, we acted accordingly. We saw a fair value gap, we placed our entry in the 50% retracement level with a stop loss below the swing low, and then target opposite liquidity, and that's how we're able to take this trade. You know that we'll be able to extract more profit if we are target even more, but then we are always sticking to the rules and sticking to our game, which is targeting opposite liquidity, and it's going to be playing well for us. Let's take a look at a different example right here. As you can see right here, without anybody telling you, we are in an uptrend, which means that we are consistently moving to the upside gradually, right? Even if it's not very, very pronounced right here, but you get the idea. We are in an uptrend, which means that we want price to continue breaking to the upside, right? So we don't want to see any candle closing below these lows right here. We don't want to see price giving us bearish displacement to the downside. But there you can see signs that the buyers are getting tired of pushing this price to the upside. You can see that we have equal highs right here. So now let's let this chart play and let's see what is going to happen in the future. We had liquidity at this point right here, right? We had equal highs right here, liquidity at this point, lying at this point, which means that there are a lot of traders who wanted to go long if price surpasses this point, and also there are a lot of traders who were selling at this point because they thought that price was going to continue going lower from here and then placing their stop loss above here. So see what happened before price eventually started going down. Price eventually went up, hit all the stop loss from all the traders that are shorting from this point, and also triggered the buy stop orders from all the traders that want to be going long if price surpasses this point, and then started distributing to the downside, right? The market again doesn't want anybody to make profit. It's here to take money from you, but then if you're very, very smart, you're going to actually make some profit from the market. Now the first thing we can see right here is that we can see a fair value gap and another block. You can see another block is a large up close candle that strips liquidity, and this candle is doing exactly that, stripping liquidity before this bearish displacement to the downside. And also this is a fair value gap right here, which means that the low of this first candle is not overlapping with this high right here. So that means we even have two confirmations right here. Fair value gap and the other block is what we are going to use as our confirmation right here. So we are going to place our sell limit order at the 50% retracement level of this zone, hoping that price is going to come to this point, trigger our entry and pull down to the downside, right? Our stop loss is going to be at this swing high right here. Our target is going to be at a swing low at the bottom right here. Now let's see how this trade is going to play out. Eventually came back to fill in this level of inefficiency that is left in the market, right, with just 2 weeks. Like, it had to come back to fill in this level of inefficiency before moving to the downside. And eventually, after price filling this level of inefficiency, you can see the displacement to the downside.